Hello, Dennis Smith, Stratus Financial on Wednesday, July 13th. I'm going to speak fast to try and keep up. I'm going to show you how much money the Federal Reserve has spent now that Ben Bernanke has told Congress today that he may print more money and spend even more to try and revive the economy, because what he spent so far hasn't evidently been enough because it hasn't done anything. So he wants to put more money into the same places that it hasn't done anything except make some people very wealthy, have some people pay more, and keep some people unemployed. You ready? Let's go. Let's take a look at where the money's been spent so far. Okay, so we're going to go all the way to the top of our chart here, and we'll go all the way to the top of our chart. November 2008, $600 billion to purchase mortgages, not enough to prop up the housing market. So in March of 2009, another $625 billion to purchase mortgages, plus they'll go ahead and spend another $300 billion to buy treasuries for a total of $1.525 trillion. Things weren't working out as well as they wanted. The economy wasn't growing as fast as they wanted. Once it got positive, it was sluggish. So in November, you may recall, right after the elections, they announced another QE2, quantitative easing 2, going to purchase $600 billion in United States treasuries. Folks, treasuries are our debt. They're buying, the Federal Reserve is buying the debt from the Treasury. So one department's taking it from another. At the same time, they're going to convert $350 billion in mortgages that are paying off through refinances, through low rates, to buy more. So that's another $950 billion into the economy. So the total Fed intervention from November 2008 through just 2 weeks ago, June 30th, $2,475 billion was spent to try and stimulate your economy. Let's not forget that in February of 2009, Congress also pumped $800 billion into the economy with the stimulus package signed by President Obama, bringing the combination between the Fed and Congress at $3,275 billion. Did it work? Well, let's take a look. GDP at the time of the first Fed intervention was minus 6.8. It went positive in the first quarter of 2009 when they decided to pump another $900 billion into the economy, plus $800 billion from the Congress, for a total of almost $2 trillion. And the GDP started going up. GDP shrank. Fed not happy. We're going to put more money in with QE2. Pump more money in, GDP starts to go up, and it starts to slip down again. What happens? Fed Chairman Bernanke tells Congress, I may print more money and put more money into the economy because we want to see these pops, not these declines. What about you who are working? Well, here's the unemployment rate from the beginning of the quantitative easing from the Fed, and it climbed and climbed all the way up to above 9.5%. After seeing above 9.5% for too long, Bernanke says, we need to stimulate the economy. We need to put more money into the economy, so we're going to go with QE2, and that's going to lower unemployment. It's going to create jobs and stimulate the economy. And it kind of worked for a little while when we saw a little bit of a dip below 9% for unemployment. But as we've seen the last 3 months, it's climbed back up. So what's going on overall? Jobless claims really have been spiky up and down, but we're at 400,000 now, and we were about 550,000 when the Fed started. So unemployment claims have slowed, but have you seen from the previous graphs, not tremendously. Who's benefited? How about this? When the Fed first came in to do their quantitative easing and started to put your money into the stock market, or their money, which becomes our money, on November 25th, the stock market was at 8,244. We bottomed out in the March. We had the announcement of the expansion of the quantitative easing. The stimulus bill came through, and then the Fed money starts to hit the market. And it goes up and up and up and up, and then we finally come into November when they announced it again. And we'd already risen from 8,244. Now we're around 11,400, 11,300. And they announced QE2 to put more money into the stock market and more money into the economy. And what's happened? We've seen it grow another 1,000 points to 12,600. So $3.275 trillion has gone into the economy. And what have we seen? A stock market that has grown 53%. At the same time, unemployment has stayed relatively unchanged with 14 million unemployed Americans. And this little line down here, this little green line, that's commodity prices. That's what you're paying for goods at the grocery store and gas. They have also gone up tremendously since the Fed started their easing or putting money into the economy. So, has it worked? Has $3.275 trillion helped our economy? I don't think so. I think the Fed needs to take another tack and kind of put pressure on Congress to create jobs instead of putting more money into the economy. Jobs mean taxes. That'll help solve a lot of problems. If I can help you with your mortgage problems or your mortgage issues, please give me a call. Dennis Smith, Stratus Financial, 562-243-6912, or you can find me at denniscsmith.com. I hope you enjoyed this quick little lesson on what's going on with the Fed. $3.275 trillion from stimulus and the Fed. It hasn't worked, but they're going to keep trying to put more and more money into the economy, hoping it works the next time or the next time. What do you think? Drop me a line and let me know. Take care. Have a great day.